Welcome back to the trading mindset, guys. So today's video is going to be really important, especially if you're starting out in trading and you find it difficult to take the reversal trades, or if you find it difficult to trade in the ranging markets. I will be showing you three reversal trades that I took last week. I will be breaking down how I took them, why I took them, and how can you take advantage of the reversal trades as well. So let's dive in. So when I first started in trading, I used to find it really difficult and really challenging to take the reversal trades, and especially in the ranging markets. I used to watch other traders take the same trades in those same conditions effortlessly, and which made it even more frustrating. But with time and experience, I began to realize the patterns and the behaviors of the market, and I realized one simple key truth, and that is there's only one way to get better at it, and that is by focusing on the high quality setups and pressing the button. What I mean by that is by executing the trades and focus only on the high quality setups. And by high quality, what I mean is the setups which have high probability of winning, of success. So let's look at our first trade, which was on GBP So this is 1 hour time frame and this is 1 minute time frame. So this was the trade that I took, and let's see why did I take this trade. So this was the previous candle. So the previous candle faced rejection around this level. So what is this level? Well, this is a rejection level, right? So when this particular candle came around this level, I was expecting the safe movement from price, which is a little bit of bullish movement from this particular level. So let's see what made this particular trade a high probability trade. So let's jump into the 1 minute time frame and let's see. So first, when market closed below this level, this 1 minute candle closed below this level, I was not interested to take the trade anymore. But after 1, 2, 3, and 4 bearish candles was covered by this single bullish candle, I was again interested in buying the market. Why? Because the bearish sentiment has been depleting at this particular level, and with this bullish close, the buyers have proved that they are entered in the market and they are ready to take the market up from this particular level. So I put my entry over here, my stop loss over here, and I simply aim for this high. Now, why did I not go for the bigger targets? Why did I not aim for this high or maybe even higher? Now, I know that I am going against the trend. The trend here in this particular scenario is down. On the bigger time frame, the trend is up, but here in this particular time, the trend is down. Now, when I'm going against the trend, I want to be in and out of the market as quickly as possible, because the market can reverse from any point. It can reverse around this level, it can reverse around this level, or maybe around this level, maybe around from here. But in this particular scenario, market went a little bit up and then it decided to go down. Did it go down? Yes. As you can see on the live chart, the price went a little bit up and then it went down. So that is why I want to be really cautious when I'm going against the trend, and that is what you should keep in mind as well. So let's look at one more example in this particular chart that I'm seeing right now. Is so my trade was here, right? But can you see this level? This is also a wick rejection level. I did not take this trade, by the way. So market came around this level and it completely rejected and it reversed from there. It went up, it came down again, and this overextended candle, you can see here the market reversed from this level as well. So this is how you can take advantage of this type of trades. What you want to say is you have to look for the overextended candles in the market, and then those overextended candles have to come into a wick rejection area or maybe a strong level that suggests that market could reverse from that point. I hope this is clear. So let's look at our second trade, and this trade was in gold. So this was the particular trade, and again this is the 1 hour time frame and this is the 1 minute time frame. But before taking this particular trade, I took one more trade, and that trade was a loss. My entry was over here, my stop loss was over here, and I simply aimed for this target. Now taking this particular trade was a mistake. Why? Because it was a low probability setup. Why was it a low probability setup? It was simply I was expecting a reaction from this level, Is it a strong level? No, that is not a strong level. So that is my first mistake. I did not see that. And the second mistake was, is this an overextended candle? When it came around this level, no, it was not an overextended candle. And also, this is not a very strong level to take reversal trade. It might reverse for a bit, but it is not a very high probability setup. So this is the loss that I deserved because I made mistake. I did not realize, I did not see these things. I should have seen that. But moving on, when the candle came around this level, this candle became an overextended candle. And also this was the first reason. And the second reason, can you see around here, it is a very strong level. And when market closed above this level, this was a clear sign that the bulls have stepped in the market. They are ready to take the price up from this level. But what does this candle mean? This candle simply means that it is here to manipulate, and it is simply here to take our stop losses. So what did I do? I simply went on my 1 minute time frame. I was looking for any bullish behavior pattern showing the bullishness and showing that the buyers have entered the market again after this selling move. Now on the 1 minute time frame, I am seeing that this is a double bottom pattern. And what a double bottom pattern suggests, it suggests that the buyers have entered in the market and they are ready to take the market up from this particular level, and the market went up from this level. So this was the second trade. I hope this trade was clear. So this is the third trade that I took on GBP JPY again. So again, this is a 1 hour time frame, and this is 1 minute time frame. And again, what am I looking? I'm looking for a reversal from a particular level. What do I need? An overextended candle and a level in the market that price is facing difficulties to cross. So as it can be seen, this is a level in the market that price is not ready to break yet. And this was the particular trade I took. But before taking this trade, I took one more trade, and that was a loss, which was my entry was over here and my stop loss was over here. And I simply aimed for this target. But again, it was a loss. Market just wicked me out. It tried to go up, but the bears brought the market down. When this candle was formed, I was ready to re-enter around this particular level. Why? Because this is a bearish engulfing pattern, and this is a very strong pattern that suggests that it could be a reversal. So that makes this particular trade a high probability setup. So I placed my entry over here again, and my stop loss just above this level. I went for a bigger stop loss in this particular scenario because market could try to go up and then it can face a rejection again and it can go down. So that is why I went for a bigger stop loss in this particular case. But instead of targeting this low, I aimed for my 2 hour target. And what do I mean by the 2 hour target? When I am saying it is a 2 hour trade or 1 hour trade or 3 hour trade, that is simply just the reward. I will explain in detail at the end of the video about this topic. So moving on, after this particular loss, I wanted to go for 2 hour target. If I did not have faced this loss, then I would have aimed for this target. But after facing this loss, I aim for the 2 hour target. It is just my risk management strategy that I will talk about in the future videos. So was it a high probability trade? According to me, yeah. Maybe it was not an overextended candle, but this rejection area makes it a high probability trade. And also what I really loved about this trade was market tried to go up. It closed above this particular level and then it came down. And when things like this happen, that makes the trade very high probability, because what this particular scenario is suggesting me that the buyers tried to take the market up, but the sellers were strong enough to take the market down. And at this particular level, I can take the entry comfortably and place my stop loss above this level, and I just simply aim for my 2 hour target. And I hope this is clear. Now let's talk about what do I mean by the 2 hour trade or the 3 hour trade or the 1 hour trade. What do I mean by that? When I'm saying the hour, that means my risk to reward. For example, let's just say I risked $500 in this particular trade. This is my 1 hour because this is my risk, and I am aiming my 2 hour reward, which is this is a 2 hour, and 2 hour means that twice the multiplication of what I risked, right? So in this case, I risked my $500 to make 2 hour, which means twice of 500. Then that is I am risking $500 to make $1,000, and that is my reward. So this plays a very important role. You need to have a positive risk to reward ratio. If you are going for 1:1 risk to reward ratio, that is not very sustainable in the long term. So that is what I want to keep in mind, that I am at least going for 1.5 hour or maybe 2 hour, because that means I want to risk 500 to make at least $750 or $1,000 to sustain in this game for the longer time. So again, this is 1 hour. If I lose this trade, it's gonna be -1 hour, and if I win this trade, it's gonna be a plus 2 hour trade. All right, I raised 500 to make 1,000. I raised 1 hour to make 2 hour. I hope now this is clear. So this was it from my side, guys. I hope you liked the video, and if you did, do like the video and do subscribe, and let me know in the comments section if you face the reversal trades difficult to take, or maybe in the ranging markets. I'll see you in the next one. Until then, take care and keep trusting the process.